Trump's approach to the dollar is, beset with multiple ironies. I think what Trump has indicated is that he would want a weaker dollar in the short run because he knows that could be good for the competitiveness of U.S. exports. But he wants the dollar to remain strong in the long run as the dominant currency. But if you look at his policies, those are leading to exactly the opposite implications. Measures like tariffs, the possibility that that could lead to higher inflation in the US, which in turn is going to keep interest rates high. Likewise, immigration policies that could also lead to higher prices in the short run, which again might mean interest rates staying high and therefore the dollar staying high. That would run counter to his stated desires. On the other hand, we do see Trump undercutting the institutional framework that I think is really crucial to maintain the long-term supremacy of the dollar as a reserve currency, as an international payment currency, and so on. And the elements of that institutional framework include the independence of the Federal Reserve, the rule of law, and a system of checks and balances, all of which Trump eroded in his first term and is already beginning to hack away at in his second term. So that could be a problem. The reality for the rest of the world, though, is that we're going to see a lot of volatility in US policies. And given that the US still remains the largest economy, the most important financial market in the world, volatility emanating from the US is going to lead to investors around the world scurrying for cover. And when they look for safety, there really isn't much other place to go than the US dollar. So for all that Trump does, he may actually not end up being able to affect the dollar supremacy.
Professor Prasad, what do you make of Trump's seemingly more friendly approach to China than had been first expected?
What I think Trump is trying to do is to signal that China is going to have an opportunity to fend off tariffs. Now, my expectation is that there will be at least modest tariffs imposed on China. You spoke about Treasury Secretary Scott Bessent suggesting that there should be a very modest amount of universal tariffs that will then get ratcheted up over time. So certainly very high levels of tariffs that Trump spoke about in the context of China on the campaign trail don't seem to be in the cards right now. But the reality is that a lot of Trump's policies, including those that drive up the dollar, like I mentioned, are going to lead to a larger trade deficit overall for the US and possibly also larger bilateral trade deficits. So I don't think China is quite off the hook yet. One thing that Trump has made clear is that any bargain related to the tariffs not being imposed is going to be encompassing not just economic issues related to, say, the trade deficit, but also other policies for which Trump is using tariffs as a tool of leverage. And that includes statements he's made about controlling the flow of illicit drugs into the US, controlling the flows of illegal immigration into the US. So a grand bargain, if that is what China has in mind, might have to encompass a lot more than just economic measures. And it's not clear how far the Chinese government is willing to go in those areas.